Welcome to Electrified. It's your host, Dylan Loomis. Happy Tuesday, and a quick shout out to my newest patron, Bernard S. Thank you very much for the support. First up today, you can see that the scrutiny over Tesla in Xinjiang has definitely intensified, at least when it comes to the media reporting, as it's dominating the news headlines. So let's just add a few more details to the conversation. Here we have Scott Paul, the president of the Alliance for American Manufacturing, saying this decision by Tesla was especially despicable. I'll be blunt, any company doing business in Xinjiang is complicit in the cultural genocide taking place there. Further, the Council on American Islamic Relations, a DC advocacy group, called on Tesla to immediately close the store. The group went as far as to say by doing business in Xinjiang, where millions of Uyghur Muslims are being held in concentration camps and forced labor facilities, Tesla is supporting genocide. Elon Musk must close Tesla's Xinjiang showroom. Now look, it's one thing if this forced labor of these minority groups was going to take place at the Tesla showroom, then yes, Tesla would be deserving the criticism. However, I don't believe that is the case. And I think there's at least a chance that Tesla's expansion into this region could maybe provide some economic benefit to the region and some stable labor opportunities that don't otherwise exist. And the unfortunate reality is that even if Tesla decided to close up shop and leave, it's not going to do anything to stop this mistreatment of these minority groups. So everybody that's now virtue signaling and bashing Tesla for opening up a showroom, well, what are you guys doing to actually stop what's going on? The answer is nothing. And just so you're aware, Xinjiang supplies 20% of the world's cotton and 45% of all silicon usable in solar cells. It's also a major producer of electronic components, shoes, gloves, noodles, printed material, toys, and wigs. So I really don't have a super strong opinion of whether Tesla should stay or go, but with the data we have right now, to say that Tesla is complicit in genocide is just completely absurd in my opinion. Moving on, this screenshot was obtained from a Bloomberg terminal, and there are a few points I want to point out. These are the consensus estimates for Tesla deliveries and margins in the coming years. For this year, 2022, the total deliveries are estimated to be 1.29 million. More importantly though, look at 2023. They only have 1.668 million, which I really think Tesla has a decent chance of doing this year. So from this metric, basically Wall Street is 1 year behind, if not more. And this is important because as Wall Street continues to change their projections and price targets, the stock will move. Interestingly enough, for this year, they're projecting 25,763 Cybertruck deliveries. More on that in a second. And a really important metric to watch, this last line, automotive gross margin percent. Look at the expectations. We're talking holding steady around 28% and not eclipsing 30% until 2027. And in 2030, the end of the projections, it's only 34%, which some Tesla analysts think might happen as soon as this year in the next few quarters.
So, I noticed in your forecast, you have gross margins continuing to increase basically over 40% in 2023. This is kind of shocked me a bit because I don't think there's really any analyst on the street that is even close to 40% gross margins in 2023. Is most of that because of FSD, you think, take rate and the margins from that, or where's that coming from?
Yes, a lot of it is from the FSD. FSD becomes a bigger and bigger piece of automotive gross revenue as time goes by. A really serendipitous confluence of raising your prices and raising your deliveries and not raising your costs. Well, what happens when those three things happen simultaneously? There must be margin improvement.
And I absolutely think mid-30s for automotive gross margin is more than achievable, if not this year, then definitely in 2023 and 24, as Berlin and Austin have a chance to ramp and hit that economies of scale factor. Brett Winton from ARC had this to say, and I'm sharing because Elon commented on it. He said, the financial media ecosystem's widespread and generally accepted conflation of price volatility with risk massively disserves serves the investing public. I have mixed feelings about that, but Elon said absolutely, this is just bad math. To use an example to illustrate the point he's trying to make is that Tesla doesn't have to be an inherently risky investment just because the price moves up and down a significant amount relative to its benchmark. The real risk actually lies in the hands of the investor when they choose to maybe buy at the worst time or sell at the worst time. And we all need to remember that volatility is a good thing if you're long the asset. So volatility is not inherently bad. And like I said, just because a price moves up and down, that doesn't mean the asset is risky. There are so many other factors going into that equation. And on the other side, there are plenty of low beta stocks, meaning they don't move that much relative to the market, that are actually at a much greater risk of being disrupted or displaced, or being poor investments, whether it's because they won't keep up with inflation or because they won't be in existence. And the only reason I have mixed feelings about this is because I understand that in the real world, plenty of retail investors that want to trade in a sense and are not investing for the long term typically won't handle these volatile assets very well. At least that's what the data shows. Adam Jonas from Morgan Stanley released a new note today, and there were some confusing yet interesting points. So the overall theme was that Tesla's Q4 is bearish for the auto industry overall. He said it seemed like Tesla's Q4 lifted the broader auto sector, both legacy and startup EVs. But he does not think this is sustainable for these 4 reasons. Basically, EV adoption actually accelerates ICE de-adoption, which I would definitely agree with. Saying, we urge investors to consider the degradation of value for the legacy ICE business. Basically, there's a thought out there that as these legacy autos start to sell EVs, it's just going to displace their ICE business as a one-for-one trade-off, but it's not that simple. With point number 2, he said you can't take the comps for Tesla and then extrapolate that to legacy or other EV startups and run the same numbers, and I agree there too. But point 3 is where I get confused and definitely don't agree. He said the price of survival in the EV market may require being a smaller, less profitable company. Well, Tesla has so far busted up that, but let's continue. It's not that we're totally bearish on the business of making EVs, which is probably not going to be a high return business long term. I don't know if he's talking about supply chain costs or battery costs, which will normalize and continue to come down respectively, but that the market share and profit margin derived from the EV market may very likely be far lower than the market share and margins enjoyed by auto companies in the ICE market today. And this just makes no sense because Tesla, an EV company by the way, its automotive margins are already far superior to legacy autos margins. So why EV companies can't have good margins is beyond me. The bottom line, and something I agree with, he's basically struggling with the logic of how Tesla's appreciation yesterday is somehow a positive for its competitors. The market seems to believe that the shift to EVs will create more winners than losers, and that EVs are a net positive for legacy auto firms. We wonder when the market will begin to price higher EV adoption as a net negative for auto stocks. Based on the first 2 days of trading in 2022, the market is so far sending a resounding message of not this year. So overall, I think this is a very important trend to watch in 2022. I mentioned earlier we'll have an update on the Cybertruck production for this year. We think this is the new Cybertruck order page. You will be able to complete your configuration as production nears. This is a change because if you go back to the Wayback Machine, yes, this was earlier in December, but it said you will be able to complete your configuration as production nears in 2022. So the 2022 is no longer there. Maybe it went away because it is already 2022, or maybe there are some expected delays. I don't want to speculate. We'll just have to wait and see on the Q4 call what Elon says, as he should be on the call giving us a product map update. Speaking of that, this tweet from Wheelie Man breaking, my sources have told me we can expect a huge announcement by the end of the week from Elon regarding Giga Texas. And this got a lot of traction in the Tesla community, and this was posted January 3rd, so that would be the end of this week. We'll see if anything comes to fruition. Here is a quick clip shared by RVT on YouTube of the Model 3 with the new AMD Ryzen chip on Wi-Fi so you can see the performance. Not sure if you saw this, but last night, hundreds of people were stranded on I-95 for 10 plus hours with temperatures in the low teens. Never seen anything like this. About 50 miles of the interstate paralyzed, not moving. I bring this up though because I would love to see somebody do a real world test of a Tesla in conditions like this, maybe putting it in camp mode to see how long Tesla could last in comfortable living conditions inside the cabin in this type of environment. And it would be great to see that same test done with an ICE counterpart vehicle just to see if there's any difference in a situation like this, albeit very rare. Kicking off the new year, Tesla is now offering a 401k match for its employees. Tesla has long been criticized in the past for not offering this, but what that group fails to realize is that Tesla offers many other benefits, namely stock options that are arguably much more valuable than just an employee match. Either way, this discretionary employee match will match 50% of the first 6%, capped at $3,000 annually of your eligible compensation that you contribute to your 401k plan. There is a 1-year vesting period on Tesla's program. Tesla South Gippsland shared a really cool tweet that I think deserves a lot more attention. I'll show you the video here and speed it up a little bit, and I'll link the tweet below. Believe it or not, Ford actually beat Tesla in 2021 in terms of stock performance, up about 140% on the year, while Tesla for 2021 was up about 48%. Investors have rewarded the new direction under auto veteran Jim Farley, who took the helm in October 2020 after Ford ousted Jim Hackett. Farley launched the Ford Plus restructuring plan, which will shift more resources to build EVs like the F-150 Lightning and the recent announcement of the production boost to the Mach-E. Since Farley took the helm more than 15 months ago, the stock is up by more than 200%. And honestly, great for Ford, great for the shareholders. Like I said, we need some of these companies to succeed. I don't want to see millions of people just blown up with no jobs scrambling. I really do hope some of this transition goes well. And there are some other companies maybe that I'm not rooting for as much. But so far, generally speaking, I like what I've seen from Farley and team. A pretty monumental story here, and maybe a sign of a shifting of the guard. Toyota dethrones GM as the US sales leader after nearly a century, not a decade, but a century on top. Toyota outsold GM in the US in 2021, the first time it's happened, and GM hasn't been the US leader since 1931. GM's US sales were down 13% last year, and Toyota was up 10% for the year. And this was pretty funny. GM spokesman Jim Kane had this to say: "I wouldn't rush out if I were Toyota and get a weird number 1 tattoo." In GM's defense, the company has come out and said that it is now focusing on profitability over volume as they have left certain markets. The headline I am really looking forward to see though is this: Toyota is launching its own automotive software platform reportedly by 2025. It will be named Arene, and it will have plans to make it available with certain affiliates like Subaru in the future. Toyota is already considering a licensing model to make Arene available to other car manufacturers and companies working on EVs or self-driving cars. Maybe they should get the software up and running for themselves and prove it out before they talk about licensing it to other companies. This software system should control basic components, the steering wheel, brakes, and accelerator, and consumers should be able to update the system online. Volkswagen is doing something similar, working on its VW.OS system, and Daimler is working on its MB.OS in its own vehicles by 2024. And Toyota is also looking to hire more software specialists in its hires of fresh engineering grads to between 40 and 50% this spring from about 20% previously. But that'll do it for today. Please take a second to like the video if you did. Hope you guys have a great day, and a huge thank you to all of my Patreon supporters.